This feels exactly like 2008, but everyone's ignoring it. Back then, the headlines were full of optimism. Home prices were unstoppable. People were quitting their jobs to flip real estate, and Wall Street claimed the system had evolved until it all came crashing down. Fast forward to 2025, and I'm getting that same uneasy feeling again. Tech valuations are skyrocketing. Retail investors are chasing every new AI stock, and the fear of missing out has replaced basic risk management. The data looks different, but the psychology feels identical. In this video, we're going to break down why many experts believe the US market might be inflating another massive bubble, the hidden signals everyone's ignoring, and what you can do right now to protect your wealth before it's too late. Because history doesn't repeat exactly, it rhymes. And when everyone starts saying, this time is different, that's usually the first warning sign. Welcome to Mindset for Wealth, where we help you think smarter, invest wiser, and build long-term financial resilience. If you care about your financial future, hit that subscribe button, give this video a like, and let's dive in. In 2008, the world learned a painful lesson about what happens when easy money meets unchecked optimism. It all started with low interest rates and a simple belief: real estate never goes down. Banks handed out loans to anyone who asked. People bought homes they couldn't afford, betting that prices would keep rising forever. Wall Street packaged those risky mortgages into complex products, stamped them as safe, and sold them worldwide. For a while, it looked like a financial miracle. Everyone was getting richer on paper. The news celebrated the new era of growth. Even the experts said, this time, it's different. But beneath that confidence was a fragile structure built on leverage, speculation, and denial. When the first cracks appeared, when people started defaulting on their mortgages, it triggered a domino effect that brought down the global financial system. By the time the dust settled, trillions of dollars in wealth had vanished, millions of people lost their homes, and the myth of endless growth collapsed overnight. The biggest takeaway? The 2008 crisis didn't begin with panic. It began with confidence. It began when everyone stopped questioning how sustainable the growth really was. And today, if you look closely, some of those same patterns are quietly reappearing. 17 years later, the players have changed, the assets have changed, but the game feels hauntingly familiar. Instead of real estate, today's bubble is fueled by technology, artificial intelligence, and cheap liquidity. The Nasdaq trades at over 30 times earnings, one of the highest levels in 2 decades. Some AI companies have doubled or tripled in value without turning a single profit. Retail investors, armed with zero-commission apps and endless optimism, are throwing money into anything that promises the future. Sound familiar? Back in 2007, it was the housing market. In 2025, it's the AI economy. The story is the same. Low interest rates flood the system with cash, asset prices explode, and everyone convinces themselves that fundamentals no longer matter. The Federal Reserve has spent years stimulating growth, and now inflation has cooled just enough for markets to believe that rate cuts are coming. But here's the paradox. Cheaper money doesn't fix a bubble. It inflates it further. Every time the Fed blinks, investors take it as permission to take on more risk. Meanwhile, margin debt, money borrowed to buy stocks, is at its highest level since records began. Corporate buybacks are back in full swing, and financial media is once again filled with headlines about the unstoppable market. The numbers may be digital this time, but the psychology is identical. Greed disguised as growth, speculation disguised as innovation. Everyone thinks they're smarter than the last generation. Everyone believes this time is different. But if you study history closely, you'll see that every bubble starts with that exact sentence. If you want to know whether a market is in a bubble, don't just look at prices. Look at behavior, because human behavior always gives it away. Right now, we're seeing the same warning signs that showed up just before every major crash in history. First, the rise of blind speculation. Retail investors are chasing anything that moves. AI startups with zero revenue, meme stocks that surge 300% overnight, and crypto tokens that promise the next revolution. On Reddit and X, people are posting screenshots of 6-figure gains like it's easy money. It's not investing anymore. It's gambling with confidence. Second, smart money is quietly exiting. Institutional investors are selling into strength. Hedge funds have been trimming exposure for months, while retail inflows keep hitting new highs. When the professionals are stepping out and the public is rushing in, that's not a healthy sign. Third, insiders are cashing out. Executives at top AI and tech companies are selling record amounts of their own stock. They might call it portfolio diversification, but history tells us insiders sell for one reason. They think prices are peaking. Fourth, the narrative trap. When the media starts repeating, "This time is different," you know it's not. Every bubble has a story. In 2008, it was "real estate never goes down." Today, it's "AI will change everything." The story might be true long-term, but short-term euphoria always ends the same way. The scary part? None of this feels dangerous right now. And that's exactly how every bubble feels, right before it bursts. Every financial bubble follows the same emotional pattern: optimism, excitement, denial, and finally, fear. In 2008, it wasn't just bad mortgages that brought the system down. It was human behavior. People ignored risk because everyone else was making money. Banks leveraged 30-1. Credit rating agencies looked the other way, and investors believed growth could defy gravity. The truth is, bubbles don't burst because of bad assets. They burst because of bad assumptions. Everyone assumes the good times will last forever. Everyone assumes they'll be smart enough to get out before it's too late. And everyone assumes that someone else will be the one left holding the bag. Sound familiar? In 2025, we're watching the same psychology play out, only this time it's wrapped in new technology. Investors are calling AI the next industrial revolution, and they might be right. But revolutions always come with casualties. Zoho CEO Sridhar Vembu recently said the US market is in a massive bubble. He's not alone. More and more seasoned investors are warning that valuations are detached from reality, and the more people ignore those warnings, the louder they become. History doesn't punish greed immediately. It waits until everyone's convinced they're safe, and then it strikes all at once. That's why understanding history isn't optional. It's your only advantage. If there's one thing history teaches us, it's that you don't have to predict the crash. You just have to prepare for it. The smartest investors aren't the ones who always buy at the bottom or sell at the top. They're the ones who survive every cycle. They manage risk, keep cash on hand, and never let greed replace logic. So what can you do right now? First, stop chasing the hype. When everyone around you is making easy money, that's not a signal to join. That's a signal to pause. Second, revisit your fundamentals. Invest in what you understand, not in what's trending. Ask, if this stock dropped 50% tomorrow, would I still believe in the business? If the answer is no, it's not an investment. It's a gamble. Third, protect your liquidity. Cash isn't trash when bubbles pop. It's what gives you the power to buy opportunities when others panic. Finally, remember this. Wealth isn't built in bull markets. It's preserved through bear markets. The people who come out ahead aren't the ones who time the market perfectly, but the ones who stay disciplined when everyone else loses control. Mindset creates wealth, not luck, not hype. Mindset. 2008 didn't begin with panic. It began with confidence, and confidence unchecked always turns into complacency. We're seeing it again today. Markets at record highs, investors chasing risk, headlines celebrating unstoppable growth. But history has a way of humbling those who stop questioning. Remember, history doesn't repeat, but it rhymes. What you choose to do now will define your financial future. If this video gave you perspective, hit like, share, and subscribe to Mindset for Wealth, where we help you think smarter, invest wiser, and build lasting wealth through every cycle.